basically brushing up against its highs. I actually still have a small short position that I'm hanging on. We'll go in and discuss where things are going to move or where we think they're going to move, and get prepared for the NFP session. As I said, the euro's still pretty firm, basically right on its highs right here. I thought we'd start to fade them in as we come into the NFP, but they're still fairly resilient. I think probably they're putting a little squeeze on anybody that was looking for a pullback and see if they can lean on them. Fortunately for me, it's a small position, so it's not some, I personally would rather see it a whole heck of a lot lower. But I kind of think that this is, we just had the quarter in, and then of course going to NFP, I just think that we're going to put a short-term high in the euro dollar, i.e. short-term low in the dollar itself. We're going to take a look at the report that's coming up ahead. Not really concerned about what happened in Europe, because really everything's all about the non-farm payrolls. So last month we had 242. They're looking for 205, and the non-farm payroll. Now I'm not really worried about private, although private was pretty good at 230. Also, last month we also had some, and I guess that's what people got people thinking that there was going to be a move in April, is we had some upward revisions from the previous 2 months. So that was also positive. Now, last month, manufacturing dropped 16,000. The Reuters poll looking for a gain of 2,000. I think this might even be a little bit better. Could be a little bit of a crimp. Not really worried about government payrolls whatsoever. Now, the unemployment rate was at 4.9. They're expecting 4.9 again. I think it'll come in at 4.9, although if it ticks down to 4.8, man, that's going to really go on to get some people, it's going to spook some people, but I think it'll still come in right here at that 4.9, but too, if it comes at 4.8, everybody's going to be throwing tomatoes at Yellen, saying, it's time to hike, and there'll be, a push, on the dollar, to firm up. This is the real key marker here. I don't think it's as key as it was, as I've described it over the last few months. Now I see a lot of people starting to latch onto it. I mean, you're a little bit too late for the party at this point. But it's going to be key, which is hourly earnings. I mean, last month, I'm not going to go into, I've already done that enough, how important this has been for Yellen and also payroll growth. I do this every month. We've been going over this, the significance of this. This is really called significant moves in the, when the payroll number came up far better than most people expected. The dollar strengthened, or in this case, the euro dollar really weakened. But then I pointed out to Blake while I'm there, hey, wait a minute, the average hourly earnings came in negative. This is going to be good for the euro dollars. I think at the time he was long, and sure enough, we bounced back pretty quick. So that's all I'm going to allude to it. If you don't know about it, I've been going about this ad nauseum, even on my stream. So if you're not aware about this, I don't know what to tell you. I'm not going to spend any more time on that. Average work week hours, they're expecting it to tick up to 0.5. That's 34.5. I mean, if it, I don't think it's as important now because the economy's coming along. If the economy was at a point where they weren't sure if it could continue to grow, the job growth could continue to grow, then you'd put more emphasis on this. Like you'd be putting more emphasis on this like about a year ago. If you saw the average work week tick up, let's say in this case, 34.7, then you see that there was a pressure and that they're, getting people to work more, which means more overtime, and that probably would indicate that they would be hiring more people in the very short haul. I don't think that this is important also at this point in time where we are in the labor cycle at this point. Just doesn't, but I think it looks like it'll come in a little bit firmer, which makes some sense. Like I said, so those are the key things I think to focus on. Obviously, this was going to get the biggest attention, non-farm payroll, the headline number. Manufacturing is something to keep an eye on overall to see what the guts of the number is. There some additional strength here, especially after losing 16 last month. I think this could be a little bit firmer than 2. That'll have some inherent strength of the dollar, if it comes in something like at 12,000, I think it's going to come in pretty decent. We'll see overall, but it looks like we've seen some hiring. I think this can be stronger than this too. And also, I think that the unemployment rate, if it ticks down to 4.8, man, it's going to be, and it could, but I think it's going to be, you know, to be honest with you, I think it's going to be something like 4.848, and they'll just round it up to 4.9. Because I tell you, if it kicks it down to 4.8, you're going to see a whole heck of a lot more pressure. And I think maybe not necessarily right at that moment this day, but I tell you what, going forward into next week, that's what I think that we're going to see a short-term high in the euro dollar, is that I think then we'll have to start to come back in a little bit, and there'll be concerns, but I don't think it'll be enough to send the euro dollar, you know, like flip it all the way back down and it starts heading to 10, but I think it just needs to digest its gains. So now later on in the morning, we're going to go on and have, we're going to have ISM manufacturing PMI, and that's expected to come in at 50.7. It was 49.50. I think this is going to be in line too. I mean, it could even come in a little bit better. Prices paid they're expecting that to tick up, and the employment index, they're expecting that to tick up also. So I think that this report has a chance to, if it firms up the dollar, has a chance to even firm it up a little bit more. But we'll have to see, you know, how things go and play out. Then we have final University of Michigan, 90.50 versus 91.70. I think this could also even be a little bit firmer too. Could even surprise a little bit, but it's a final number, so it's probably not going to impact it that much. But it could be just a tad bit firmer. Let's see, so we'll go into the charts. As I said, this is kind of like, you know, usually before NFP, we kind of, just one moment. Sam says, good morning, so is Walter. Good morning, guys. We just try and get an overview from a strategy standpoint as to what the expectations are from the market, and then you go in and you know, work around, depending on what markets you're trading, or if you're not trading at the moment, which isn't a bad idea, to kind of get an overall view of how the market may react. And then we try to look at extreme levels on the upside and the downside. And we'll be doing that in the various FX pairs. But like I said, so we try and look at what the market's looking at. I don't think, if you think about this, here's the difference between this month and the previous few months, that we you know, like I said, for the most part, we've done pretty well as calling the market. And I think there was that 1 month, I think it was 2 months or 3 months back, where I was thinking, I was expecting something like 214, and we came in like at 166 or something like that. It might have been 2 months back. But overall, our read, as far as hourly earnings and all that, has been pretty much spot on. And also the read, like on manufacturing. I mean, the calls that when we see it also in real time, and we're saying, hey, the market's going to react this way, we've done pretty well. I mean, pretty spot on. I don't think this month's as important or as impactful, because Yellen basically dropped the hammer. Basically, you know, hey, I'm not going to raise anytime soon, essentially, is what she's saying, and how the market is interpreting that. So it has less of an impact as opposed to before that. That being said, what it would do is, if we see the hourly earnings tick up to 0.2, which I think is reasonable, and if we receive this to tick down to 4.8, then it's going to say, hey, she needs to rethink that. And you have to consider June on the table. That's all it does. It doesn't flip the script where we all of a sudden start making a movement, let's say in the euro dollar, down to 110. It doesn't do that. The euro would only make a move down towards about, let's say, 12 and a quarter or something like that overall. Maybe, you know, 112. It doesn't flip the script, because with what Yellen's done, she's already laid it out, and so she's taken away, basically, obviously taken away April. People were just idiots thinking that there was going to be a move in April. but it takes away June and potentially a little and further out. What it does is if they got good numbers, then it says, man, you need to rethink this. You might just be playing too cautious. So then, although not likely, it puts June, the percentages June, I don't know what they are, but I'm just saying, let's say the percentages of June right now would be 25% they raise in June. It pushes it up now to like 38% of 40. That's what I'm saying. It doesn't really flip the script in any way whatsoever. It just puts June in play, and then that would allow that back and fill. So that's the way to look at it. I think that the dollar is going to be put in a short-term low today, and it doesn't mean that we're going to turn around and spike higher in the dollar, but I think the dollar will start to work stronger next week as they reposition the moves that were made at quarter/month end. So we're going to move into the pairs to go and take a look at that. Okay, so let's take a look at here we are in the euro dollar. And we had this level yesterday, 14.13. And I'm surprised that it's made it up here. I got short at 13.74, and I got short, and depending on how you look at it with FIFO, first in, first out, my ad here, which was 13.54. Although I had another ad, the third one at 13.26. So that's the one that I would say the ad from 13.54 is what I would have considered when I got out here at like 13.14. So I'm not looking at FIFO. The way I'm looking at it is I put on a position at 13.26 and I had it added on another position yesterday at 13.74. That's where I'm looking at. I did add that one at 13.54, and then I consider that to be the one that I took off at 13.14, I think it was. So the way I look at it is no, I had nice scalps from 2 days ago, but I look at this as saying, hey, look, I look at my worst case position, which was the 13.26, still having that, not the 13.54, and then I got out at a real great price or whatever. So I look at it that way. So let's go, anyway, let's focus on the euro. Fortunately, like I said, for me, it's a small position, very small, but I wanted to go on and just take advantage of the scalping. That being said, I mean, the smart thing would be, well, if you're only looking for a little bit, then you should be out. And technically, if you want to look at it that way, you're right. The only way the reason I look at it, as I said before, as a valuation perspective is we talked about this move, that we would move much higher. And my numbers on the upside, as I said, were 13.76 for the market to tick off, 14.92, and then ultimately 17.30 up here. I just think that we've reached that one level that I was talking about, 13.76, which is i.e. here, 13.81. Doesn't mean we couldn't push higher. We've done that here to 14.13. I just think that we've come so far so fast. Now, what aided this was quarter in. And part of the reason is quarter in because apparently a lot of people still weren't sure what the euro was going to do, but it was pretty obvious. And so it was all about positioning. Some people were just on the wrong side of the street. So that's what pushed us higher. Although I'm surprised that we've even made up to this high, but that happens in the euro. The euro, I mean, I was going to say, for some of you who don't know, probably a lot of y'all here trade the euro a lot, but it goes to extremes. You know, you'll see these moves that are just very extremish, despite the liquidity that you see here in the euro. It'll still move to these extreme moves, either to the upside or the downside. I mean, well, they'll push them even higher than anyone expected. Obviously, there was the August debacle, but the same here, where the market just goes down. I mean, a good example was here, and that was an extreme move, the one in August. But, you know, when you look at this move here in December, Look at that. They just kept selling it lower and lower. And they're just punishing people. Just punishing people, just going. And I remember this. It's just like, it wouldn't bounce to save its life. And it just kept making new lows. And anybody that tried to buy the bottom, they just get slapped. And then try to buy the bottom again, they get slapped. Try to buy the bottom, they get slapped. Finally, we get this little bounce, and it doesn't even last very long. And then all of a sudden, kaboom, the market just goes wacko to the upside, then pulls back, very hardy pullback, here of, almost 200 pips, 180 pips. Then turn around and rallies it back up from this area, 250 pips almost, only to go in and come back like 85 pips and rally. So you get these extreme moves in Euro, and quite often when it's got your feet to the fire, it'll just keep pressing and pressing and pressing until you can't take it anymore. You bail out, and then it's straight up in your grill. I think that, like I said, the reason we're, move this back down here. The reason we're so much higher is because, like I said, the market, for whatever reason, I think it was crazy, but for whatever reason, they thought that the Fed would hike. And I've been saying there's just no way that was going to happen. But apparently, despite the amount of people that I thought I realized or thought, hey, they're wrong, apparently it's an even far greater amount of people that were wrong than what even I expected. That being said, the market will push and keep on screaming higher until it feels like it's reached like a plateau area and I'll pull back. That's where I kind of think we are right now. If you think about it, this was my 1376 up in here, and I thought they'd take that out. And I guess I should have even given it a little bit more room, but they would take out this area. Let's pull this up here. Okay, they take out this area. Highlight this here, take this one off. They take out this area here. That was my target up here for it to make it up to 1376. Obviously it pulls back, but that's my thinking. Then it goes to 1492, it pulls back, and then eventually it run up to 1730. So when it takes this out, you have to give it some room to run. So I probably should have even, although I didn't think it would make it up there, let it run up to here to 1413. But we're coming up to NFP, and they really have people's feet to the fire. I just think that there just isn't a whole lot that I believe in the euro technically, and I've made that point. But I just think that we need to digest the gains. There was a guy I spoke to yesterday, or he asked me on Twitter, and he said, you don't really think it's going to pull back, do you? And then I said, well, I mean, I'm not looking for, I was looking for a move higher. I mentioned, the 1376, 1492, and 1730. I go, but I think in the short haul, it'll pull back. And he goes, yeah, I'm going to be looking to go on buy as it pulls back. And that's my thinking is, you run this level up here, I don't see where you're going to get more people to buy for another leg up after we've had this massive run. My thinking would be there'll be people who say, hey, you know what, I'm just going to go on and take some nice gains off the table and reload at lower prices, which I think is going to be right around here, this 1282-ish. Now, as far as that they can run, I think on the upside, although, I mean, it's really pressing up here, but I think it's this 1455. You see here, we've got this level, 1455. Let's see if we can take this up. You can see these touches right now. You see that? Obviously, I thought it was going to make it up to there. I wasn't sure ahead of time. But you can see the significance of 1455 here. Right here, let's see if we get a little bit better perspective. See, this is 1455. You see that as a very key area right here. And in fact, we might even bold it up even more. You see that? This is 1455. You see the market gets tired of pushes up a little bit higher, but not too. But you can see this 1455 is pretty key. We'll stretch it back out a little bit more. You see how the market trades back and forth, and it's kind of like a central theme area right here, central battle area. The market rallies up to 1713, and we come back, and where do we come back here? 1455. It tries to push up, which it does, up to about 1550, and once it goes to 1455, then the wheels fall off the caboose and we make it down to about 1376. Then we rally back up. Once we get about 1455, the floodgates open up again. You can see there's a little bit of a halt just before 1555, and then boom, then they launch up. They rally them up here to about 1550, and then on the way down, we pause before we get to 1455. They try and make another rally, and once we get to 1455, the wheels fall off the caboose and we're heading south of the border. Now, when you come down here, like around 1075, the market starts picking itself up. It really works hard to pick itself up off the mat. It makes a run up here to about 1376-ish or whatever, and then we pull back, and the market tries to reassert itself for one more last ride up the hill. And we run up here. It looks like we kind of run out of gas for 1455. We pull back, and we make one last run up. And where do we run out of gas? 1455. So you can see the significance of this 1455. So that takes us to where we are now. And had we been, like if we had been up here and we could probably go to that 1455. But if you look at where the market was as early as, almost 3 weeks ago, we were trading as low as, 822 right in here. So we've rallied 600 pips from that area, basically 600 pips in 3 weeks. Now, what gave us that extra boost, obviously, was the quarter and a month end. The people or companies or whatever said, you know what, it's going to 120. I don't see it going to 120, but they're like, it's going to 120. I just got to get myself ready for that. So we had that push. Now as we come in NFP, they've got them up here, and I guess they're just not going to let go of it. But my thinking is this 1455 is not only a major level, but 1452 is a 78% of the move from 517 back in December to the August debacle high of 1713. That's a 78% confluencing with the 1455. That's why I just think that from here, the market's going to have to work lower and consolidate some of these gains before it can work higher. And we'll have to see how the report comes in. Maybe the job growth won't be as strong, and that will give them that extra boost up in here. But if the job growth does come in good, and if for some reason, heaven forbid, if we get down to 4.8, then the euro could really come off pretty good. Today could come off, if it were to tick down to 4.8, could easily come off 100 pips, easy. But we'll have to see. But I just think that, like I said, I'm not trying to be stubborn. And in some ways, the smartest thing would be just bail out, start fresh. But my thinking is that we're kind of exhausted here, and a stronger number, considering how far we've run, we can easily come down here to 1338. That's not even no big deal. Or make a move towards this 1312. And the idea that I think we're close to a short-term top, although I think the euro will eventually reassert itself, but not till after we've had a chance to digest some of these gains, tells me, and it's a small position, you know what, just go and hang on. I could end up getting my head handed to me, but I'm just, like I said, that's my conviction on this trade. And because it's a small position, I think, you know what, I'm just going to go on and ride it out. I don't want to be stubborn. Technically, it'd be like, well, God, if you're only looking for so much, then you should just go on and just bail. You've been proven wrong or whatever. And in a sense, that would be true. I just think that there were some factors, extenuating circumstances, that being the month end, that exacerbated this move up higher. I think some people were obviously on the wrong side as far as positioning here, and that's why we got this extra move in here, and then the euro started to squeeze, but it's this month and quarter end that gave it that extra boost. That being said, we've come up here to a very key area. You see this little zone here, 1329, and I thought about this yesterday. I thought, they're not going to make it up there, or else I would have just gone, waited and add on as we made that move up here. And actually, when we came up here, I thought about adding a short. I was like, no, don't do that. But it would have been, at least I would have grabbed myself 30 pips, which wouldn't have been bad, but it is what it is. I didn't want to add on. If I only had the one entry that I had, then I would have gladly added on. But I had the second one, like, don't add on anymore. Let's see how this thing, because it could get stupid on into the month and really sparked up. But it's already gotten pretty far anyways. So that's what we have here on the euro, and I think those are the key levels. Now on the downside, I think it's going to be this 1282 for now. for now. I think that if we put in a short-term high, then technically we could probably come down to as low as maybe around the 1216 area. For if this is a short-term high and the market has to digest these gains, I think we could easily come down to the 1216. But we're gonna have to see how everything plays out. You know, after NFP. But I just think that we're near a very short-term high in the euro. So let's take a look at the dollar yen, which really hasn't moved that much. I mean, we saw some headlines. I shared some headlines from. I guess I didn't pay attention. I don't trade the dollar yen. I haven't traded the dollar yen in eons, but there was some headlines. I think he's the new guy on the block, Bank of Japan's Sakurai. So he was giving his spiel about you know, what he thinks as far as the any additional QE, the strengthening of the yen, things like that. But it hasn't really moved the market that much. So once again, I think on the yen, dollar yen, the key level, as we've spoken before, is 1177. I think that my thoughts were coming into the NFP, I thought we'd see some wild swings. But I think at this point, like the dollar yen, I think the moves are going to be, at this point now, somewhat muted because we've already had the big exaggeration move. I didn't expect that big of a move at month end, quarter end. I think we can still see some swings, and you could start to see the market start to pull back, like specifically in euro dollar. But I think we'll see some swings, but I think that it could be a swing, and then we quickly just fall right back into this range. So 1177 is going to be key. The extreme would be this. I just don't see it really make it to this 1131, but we'll have to see, because like I said, if the report were come in weak, and there's that possibility, I just don't really see it. But there's that possibility. If we see something like 155, then the euro dollar is going to rally them up pretty strong, and you know, the dollar yen would definitely weaken down here towards this 1131. And then the upside extreme, which I don't see that happening either, is going to be this 1347. Now, when we get back, it's time for break. We'll take a look at the cable. We'll take a look at the Aussie. I'm not really focusing. I already said that I'm not trading the crude oil. I haven't traded it since, I think it was Monday or Tuesday. I think might have traded a little bit on Tuesday, I think. But I'm not doing anything. And the thing about the crude oil, it's not being impacted that much by the NFP. Now, if we were in a situation where, let's say, things were just barely starting to turn around economically as far as job growth, and then we saw like a big number like 268, yeah, that would be a situation where it would impact the crude, because then it seemed like, hey, the economy's coming along, we're going to see this demand. but the job growth has been pretty consistent all the way through. The crude's going to move some, but it's not going to move that big. Now, we're starting to see some movements. I really just don't want to do anything in crude till Monday. We could take a look at it, but there's no real big analysis or thing for NFP that I'm looking at for crude. So that being said, we're going to go take a break. We'll finish up here looking here at the cable. Then we'll look at the Aussie dollar, and then we can look at the SPOOs and look at the 10-year note. And thanks for joining us here on the crossover. Okay, everybody, welcome back to the crossover. And we're looking here at the cable, and as I said before, we traded into this range that we've been going in just below 141 and up here to the 144. We bopped above it a couple of times, but once you, as I said, you sell it up against that range, we end up ultimately failing, or you look for it to fail. Yeah, there's still a chance that we can make it up here eventually to this 46.29, which is a 38%, which would actually confluence here with this trend line here that we have come down here. But you know, I think it's still pretty tough for the cable, because I think that which I didn't believe was going to be the case, but I think that Brexit vote, that, you know, for them exiting is becoming more and more of a real possibility, and that's going to keep the pressure on the cable. So I think it would have a tough time trying to get up here. It could potentially, but it would just be nothing but a stop run, that the people would end up bailing out of positions just above here, which would be probably just above 45 and a quarter, and it'd probably make this run up here to about 46.50, and then quickly run out of gas and have to come right back down here and test 45. But the safer bet, I think, is to continue to go on and sell the cable, because like I said, I just don't see where it's going to go, eventually be able to go on and move much higher. Probably the area right I'm looking at that they can potentially go to is right here. Actually, there's already made a loop down here. Right in here, these touches right in here, which is probably going to be like, what, 41.75, maybe, because I didn't realize that this bar came right all the way down here. So let's move that here to challenge this high, and maybe to right there. So that's going to come in like at 41.75 right there. We can push it and mark it off. It's actually 41.78. So anybody that's bearish, as we make a move down there, that's going to be the area to cover. Probably looks kind of like obvious, but what it does is it allows the market to take out the stops here, and then you go and find some nice support here going to this 41.78. It'll take a little while to get down there, but my thinking is, and there'll be a little bit of support here. We'll mark this here. But if you're trading this thing, and it's maybe like 42 and a quarter, yeah, it's just best to just trade from these levels to levels. I think that eventually we'll probably end up making it down here to 41.78. How quickly, I don't know, but the levels going south here to be 42.60, 42.25, and 41.78. The euro, you can see, is still holding them up firm here, and like I said, when you think about the impact of the stronger euro, it's just going to continue to weigh on Europe, which I think is actually, bearish for euro dollar. But once again, this is more about positioning at this point. Let's go and take a look here in the Aussie dollar. And we talked about this 76.93, and the market was under pressure when we made this move up here. This is about a couple of weeks back or so. I was filling in for Blake. We talked about this area here. As the market, was kind of, we're having a tough time right in here, the 76.50. And you can see this beautiful graveyard doji. This happened, and just like I said, there's probably some people that may not have been here at the time that are listening on NFP. This happened, and we came on air that morning because I talked about this, the session right before, meaning the Asian session, 12 hours before we come on the air, the iron ore futures had hit limit up in Asia. And the only thing this market could do was add on another 35 pips. And I thought that was really bearish. We talked about that. And it was actually coming in right into the 61% of 68.27 from this low down here, way down here, to that most recent significant high, which is 81.64. So this was an awesome area to go and get short. We talked about it that morning. I think we were trading right in here, and I was like, man, this is really terrible. And Asian trading iron ore futures, which are really on a tear, go limit up, and the most we can add is 35 pips because we had just taken out this high, and then from there it was, pretty much that was a done deal right there. And then they try and make this run up here towards this level of 76.34 and failed, and we took it down here. Now, obviously, what sparked up this run up is obviously with Yellen, indicating, hey, we're not going to go on and raise anytime soon. It got the market run up. But this 76.93 is pretty formidable up here. We'll back it up. We've talked about it before, but look at that level of 76.93. Was resistance, fell back here, finally made it through there, became support. Obviously we rallied them up here. We talked about this 81.64. We come back here, and it's a battlefield. Once you get past it, they open the floodgates lower. Once we get above it, boom, they take off again. And the same thing, this 76.93 is just a real battle zone right in here. So I think, like I said, is that that's why I believe that on a short-term basis, I think the dollar is going to go on and put in a low. I mean, we've had quarter in, we've got NFP, but any move up here, and we've got the 77.49. I think any moves up here are going to be, I won't say they're going to be faded, although I think they will be faded, but what I'm thinking is that any moves up here, you're going to see some longs take some very good profits. It doesn't mean that we won't eventually keep moving higher. I just think, just like I said earlier about the euro dollar, I think that the market's going to have to digest those gains. It may not happen until next week, but I think we'll have to work lower to pick ourselves up. If we make a run up here for 77.49 or 77.26, I think eventually the market will have to come down to 75.83 before we can start to work high. Maybe even a little bit lower, maybe closer to 75.56. I'm not sure if we'll even make it all the way there. And I'm talking about if we make it up here and challenge the 77.26. But I think we're going to have to at least challenge down here in this area. Even if the market remains bullish, we'll at least have to come back here to digest some gains. So let's go in. Euro still remains strong, trying to press up against these highs. And let's go and take a look here at the gold market. Drew says Euro rubber band is really tight. And it's something else. I wouldn't have thought that it kept this, but we talked about that 1452. They maybe get one more last hurrah before I think they'll have to digest the gains. My concern is if I think the jobs number could be a little bit stronger than what most people think, and that may allow maybe a 75-80 pip pullback. So we'll have to see. And then even if it comes in weak, then, which I don't see that happening, but if it were, and really going to push the euro up, it's going to be tough. Even for it to go and come back down, the onus is just going to be the people just be trying to push this thing up higher. But we're looking at gold, and we've talked about this, the 1230 line being the bias pivot. We've talked about this all, you can see how significant it's been. We can back this up further, but you can see the significance of 1239. When you get past 1239, the market really launches up. Here's that 1263 we talked about a few weeks ago. But you can see here, battle zone, you get above it, they try and launch it. When they lose it, they come back down, battle zone, battle zone, battle zone. They get above it, they try and sustain it, they can't, so they drop them right back down again. Once again, like I said, I've had this marked in red because that's my bias pivot, the 1239. And we were looking, you remember back up in here, we talked about a move to 1209, and then maybe even lower than that. Well, we had this 1205 to 38%. I was surprised, like I told you before, on this move lower here. I thought it would only make it down to about 12. I was even telling people you can cover your shorts going to the low 1230s, and we talked about that. I thought, man, worst case scenario, maybe 1226, a rally back to 1245, and then we go lower. And that morning, we were already here, and we were already past the 1239. This is the Brussels saying. Remember, we talked about this. We said we came in that morning, and I was like, wow, it rallies up $18, and it gives up half of it within an hour and a half. And I was saying how that was bearish. And so I thought we'd get past 1239, and that, we'd probably come around 1230-ish on the move down to 1230, maybe not even down to 1230, but on the move down to 1230, thinking we were on the air, it was like trading at 1232. I was like, man, I'd just be covering them. Worst case scenario, maybe I even said they may dip them down to like 1228. And to me, myself, I was thinking worst case would be 1226, that'd be it. But they would rally back up to 1245 before reasserting the move lower. And I talked about this 1209. But obviously, they broke them lower. Had a gentleman on the air, but he was mentioned, he said, hey, look, it looks bearish to me. It looks like it really might break. I'm like, well, it's possible, but I kind of think it won't take it out too much further. Well, it did. And it continued to move lower until it made it here to the 38%. And this 1205. And we talked about if it made it to 1245, we thought we'd get to 1209, and then it would rally up a little bit to 1223, then it would eventually come down to 1179. Well, like I said, the old saying, the funny thing happened on the way to Palladium, what opened the door for him to move higher, obviously it was Janet Yellen, and look, we did make it up here to the 1245. I think the market should just be stronger in light of Yellen saying they're not going to raise rates anytime soon. So this is a little bit worrisome for gold. I think at this point it's all about 1245 and sustaining a 2-hour close above 1245. But it acts like it wants to go lower eventually and get past this 1205, which once again, makes me question this whole move of the Eurodollar. Now, Eurodollar and gold haven't traded, they used to trade hand in hand, you know, 2 to 4 years ago. And they've really lost that relationship over the last maybe 14 months. They just kind of go their own way. Sometimes it kind of follows each other, but there's not much of a correlation anymore. Each one does its own thing nowadays. But it kind of makes me wonder about this move up here. We'll have to see what happens. I mean, obviously, the bulls have the control. I'm talking about the Eurodollar, and with the dollar being weaker, obviously bears in control. I just think that this is probably the, I don't want to say the last gasp, but I think would be one run here, and then the market has to digest gains, and we'll have to see. We won't know until after we get past NFP. But I mean, I've got a small short position. I'm certainly not happy about this, but I just think that the market, I think that the jobs number can be stronger. We can easily lose about 75 pips, and then, and even if it comes in line, they can rally them up here. But I think there'll be a move that eventually runs out of gas up here in this key area, and then we have to digest those gains, and then ultimately, I think we'll have to come back at least to 1282. So we'll just have to see how this goes and plays out. So we can take a quick look at the crude, but like I told you before, crude hasn't been a big mover on jobs numbers anymore because the economy is already clipping along pretty good. So there's no, it moves, but it doesn't move hugely. Okay, that's my point. So let's go on and move into the crude, which, like I said, I'm not doing anything in crude until next week. You can see they're testing this 37.53 and 37.36 is 38%. And we come down here, let's take a look at this. Get this 37.32, and it's a pretty key level here, 37.32. Matter of fact, I just go in and post something on the inside call. Hold on. So you can see here, this 37.32 is pretty key here. We had talked about this before, you know, on the move up. Obviously, this is on the continuation chart, but you can see here this 37.32 on the continuation chart was a pretty key level. That's why I've got it marked off here and the dotted lines, okay? And we've had a pretty good run down here. And when you look at it on the 30-minute, I've got this marked off because 37.36 is the 78% of this move of 35.96 to 42.49. So I think we're kind of precedent right here. Obviously, with the jobs number coming out, we can dance around. Like I told you, I don't expect a whole lot because the crude doesn't move that much on the jobs number as of recent, because the economy is just clipping along right now overall. Obviously, it would if we saw some huge surprise, either to the upside or to the downside. But overall, the movements haven't been, you know, anything big to think of or see. I looked at it last month, and there were some moves, but it wasn't anything of any real substance. And even then, the number came in somewhat, you know, a bullishly surprised number. So that's what I'm saying. That's the only thing I'm seeing here in crude. I'm not doing anything in crude until next week. As I mentioned before, there's been a little bit of disconnect. I've noticed in the RBOB and the Brent. Obviously, we see the Brent working lower, so that sparked this move lower. I'm just not paying too much attention. I'm going to wait till next week to determine what I want to go and do on that. So we're going to move into the SPOOs and notes. Hang on. And euros continue to remain, pretty firmly bid. So here we are in the SPOOs, and my whole thing is that this market probably wants to go to 2075. Obviously now we're way up. That would have to be a 30 handle move, but I think that the market still wants to be bid, and that if the report is weaker, it means no raise anytime soon, which gives them a push. And probably with that push, I think we would take out these highs right here at the minimum, to gun some stops. And if the report comes in stronger, well, look, the economy's doing really good. Economic numbers are going to be good. I mean, earnings are going to be good. Either way, I think they want to push them higher. Obviously, taking some stuff off the table in light of the recent huge move that we've had here in the SPOOs. So that makes sense. But I've talked about this 2075 being 88%, and we've already gone over this being this zone here, the 72 to 77.50. I'm not going to spend any more time on that. If you've watched it over the last few days, even the last week, we've talked about the significance between the 72 and 77.5. Just has to be confluencing here with this 2075, which is 88%, which normally doesn't impact the market as much. But when you're looking for areas of confluence, then it's pretty significant. When you think about this being the low, the 1802, to the most recent significant high, which was 2110. And we talked about that yesterday, the huge fall we saw against the 2110, and the market trying to rally back up after, like, what was it, 150 pip fall, and runs out of gas at 2104. So that's what we have here on the SPOOs. Obviously here on the 15-minute, you can see the levels. We talked about that before, the significance of 5250 to 5750. I was looking for that pre-Brussels, when Brussels fell apart. On that, we talked about the market lower. I was talking about covering at 15.25. We made to 12.25 last Friday, and then we rallied 18 handles, and then we finally were able to make this move up here. But I was saying to be careful. A move above 62.50 and a pullback would open up the door for 52.50. We made it to 51.5, I think, or 50. I missed the bottom by like one handle, and then we reasserted ourselves. And yesterday, I didn't want to do anything. I wasn't sure what would happen on this. It looked like they could try and press them higher. Obviously, they started to break them, pull them back, and then they popped them back up here, and then now we're a little bit weaker. We'll have to see how things play out in the report. So here, looking here at the 10-year note, we've had a pretty good run. Obviously, once again, a lot of people positioned on the wrong side of the market. But this 3017 is pretty key, as is this 3015, and you can see the touches coming across this 3015 right here. That happened at confluence with 3017, which is the 50% of this move of 2801 up here to 3303. And if you remember, we looked at this chart before, and I even tweeted this out. I said, any moves below 2801 to 20, and I even said down to, I think we had a fib like at 2728, but I said any moves lower, because here was the 2806. I thought we could still push them lower. I said cover on any shorts, cover on any of your shorts from, I even said below 2801 down to 2728. And we did only make it only down here to what, 28, well, 2801 on the button. So that was a pretty good call. But this Series 17 has really come a long way. We'll have to see how things play out here. But that's what we have here on the 10-year note. Blake will be coming on, so get ready for that.